Hey everyone, welcome back to Footsteps to a Trading Journey. This is Angelico again. It's been quite a while since my last video and market analysis about September, October, November, December, about 4 months. So I've been kind of vacationing, laying low for a while from trading. So just now I've decided to come back. Get my trading wheels rolling again. So I'm making my first video for the year 2011, my first forecast analysis. Now this time, a friend of mine wanted me to try to do a forecast. His name's Tyrone, and he's the one that got me into trading in the first place, way before. So Tyrone, this is for you. This is the analysis because he specifically asked for the Australian USD pair. So here I got the daily chart. I'm doing a Fibonacci slash Elliott wave slash momentum analysis of what the USD Australian dollar pair would probably do during the next few days or probably the next week. As you can see, the market's probably ending in a few hours from now. Sydney sessions just started, so it's like the last day of trading. It's Friday, and just like any other Friday, the market can go crazy. So this forecast would probably be for next week, and for what would probably happen. So disclaimer though, this is just my analysis. I don't give any guarantees of its accuracy. So trade using this information at your own risk. Please remember, don't trade money you can't afford to lose. And please always consult your financial advisor before acting upon any information with regards to trading. Okay, so what's going on here? As you can see in this chart, the daily chart, after a strong rally for the month of November, December, till the end of December though, it reached this area here. The market started to dip. As you can see, it's probably starting to look like an Elliott wave. If we trace back, the market was rising until it made a corrective action. If we look at the weekly charts, the market was rising from here to here, and this sideways movement is indicative of a corrective action. If we look at the rally, we can probably see that it's completed a full impulse wave, in my opinion. So it's like 1, 2, 3, 4, and 5. So it's probably peaking here, and there are two possible directions where it can go. So naturally, when there is a correction or a corrective action that looks like an overlapping of prices, it means to say that after a breakthrough in price in this area here, it'll probably continue with the trend, or this could be a peak depending on where the price was previously, but I wouldn't want to go that far. I'd like to focus more on the daily chart and what its behavior would be like in the next week or a few days. So as you can see, I would consider this a wave 1 of an Elliott wave, and it probably finished a wave 2. So the next thing would be, what would be the direction that it would take after a wave 2. So naturally, I would predict, in just my opinion though, that the market would probably go two directions. Not two directions, but one direction, but stopping at certain price points, namely here, where the APP price projections and Fibonacci's overlap. I'm looking at the market probably doing a pivot within this price range. The maximum we're talking about is this area here. So now, with that information, what we can probably do for short-term traders, if we look at the R or the 4-hour chart, since we know the direction is headed, I'll probably wait for the market, since the momentum indicator is saying that the market is probably going to go up shortly, because the minimum price projection for a wave 2 within the 4-hour retracement is 50%. This one. So it's probably going to go here. And if we can see a Fibonacci, the worst comes to worst, the prices probably go here, end up within this price range, and probably do a reversal once the momentum indicator reaches the overbought zone. So my strategy would be, for shorter term strategies, I would put a sell stop here on this price, or here, to make sure, till the market reverses to the same direction. Sell stop here, and put my take profit minimum would be this area here. Let me try that again. Okay, there you go. Take profit would be here at 0.9734, or if you're brave enough, 0.9640. Stops would be after, if it breaks the market here, stop would be the next high point following the reversal here. I'll probably update when I get the signal, but basically that's the idea. To recap, we have a sell stop here, take profit here or here, and depending on when the market would reverse, that's where you would place your stop loss. So that's what I think where the market would go. So we'll see in the next week or so if we're right. So this is once again, I say this is just a personal analysis based on practical Elliott wave analysis and Fibonacci analysis together with momentum indicators. So we'll just observe what happens to the market. So once again, this has been Angelico. Hope you get a lot of pips from this analysis, and hope the market goes right. And we're looking at a minimum of about 80 to 100 pip profit. So let's see where the market goes. catch you again next time on the next update. Thanks very much.